Hello and welcome to this episode of Nothing Ventured with me, Aarish Shah. Today in the studio with me, I have Joe Seager-Dupuy. Joe is an investment director in the VC team at True, a consumer and retail-focused investment and innovation advisory firm based in London with circa $1 billion of assets under management. True's VC fund invests into pre-seed to Series A startups operating in the consumer and retail verticals, both B2C and B2B. Prior to joining True, Joe was the director of corporate strategy and development at Virgin Management at the Branson family office and had spent the early part of his career in strategy at Warner Media and OC&C Strategy Consultants. In today's episode, we talk about that there is something to be said to getting beasted pretty hard early on in your career, how Branson has repeatedly done and created improbable things throughout his career, how family offices differ from VCs in how they invest in venture, why it's been a perfect storm for consumer businesses, how 60% of the GDP of most Western economies is consumer spending, $60 trillion globally, $15 trillion in Europe. Will AI agents be buying your clothes in the future? The symbiotic relationship between established retailers and startups, and Joe's contrarian opinion that Ipswich will win the premiership in the next 10 years. Let's get straight into it. This is Nothing Ventured with me, Aarish Shah, the podcast where I talk to the people behind the stories that make the venture capital ecosystem go round. I've been working with startups from pre-seed to Series C for the last decade, and companies that I've worked with have gone on to realize value and exit, or raise funds in excess of $500 million. I really hope you enjoy the episode, and if you have a guest that you'd love to see me have on, or you have a comment on any of the episodes that I've recorded so far, do reach out to me on LinkedIn or Twitter. I'd love to hear from you. Let's get straight into it. Joe, great to have you in the studio with me today. I'm excited to talk about True and your journey. Thank you so much for joining me. I really appreciate it.
Thanks for having me.
No, of course. And diving straight in, you've had a relatively varied career, right? You started off in strategy and ultimately ended up settling into venture investing. So what was it that attracted you to the industry, and what were the skills that you leveraged from your strategy background to help you make that transition?
Yeah, I think in general, I think strategy consulting was a pretty great place to start my career. You sort of build a really solid toolkit of really hard skills around quantitative analysis, logical thinking, analytical structuring, but also kind of meta skills around problem solving and being able to really unpick complex problems and break them down and sort of make them manageable and solvable as different components. So that sort of stuff is really helpful to learn early on. And you get quite a lot of broad exposure to lots of different types of businesses, right? Different sectors, different business models. And you sort of train this muscle of being able to get your head around things quite quickly and up to speed quite quickly, which again is like a really helpful toolkit to have developed, particularly for something like venture where there's a lot of similarities, right? And frankly, I think there's something to be said for just getting beasted pretty hard, 70 hours a week by people who are cleverer than you while you're early in your career. I think you're sort of learning at such a pace when you first enter the world of work anyway, and it's just kind of like adding fuel to the fire and the level of expectations and the level you have to be operating at. It's just a really good way to learn very, very quickly. And actually, I was thinking about this, and OC&C itself has a pretty good crop of alumni across the venture and startup ecosystem. So on the founder side, Tom Blomfeld from Monzo was at OC&C.
Oh, wow.
Aaron Gelbard from Bloom and Wild was at OC&C. James Meekings from Funding Circle. And then on the VC side as well, while I was there, crossed paths with Gareth, who's now at RTP, Guy, who's now at DN, Joe and Peter, who are now at Smedvig, other Joe Bond at Pro Founders, Phil at Ox. And so there must be something about sort of strategy consulting as a training ground that has some applicability into the venture world. And I think ex-consultants get a pretty bad rap.
Yeah, I roast them pretty hard on this podcast.
Yeah, and I think that's fair in many ways.
Yeah.
But in our defense, I would say it is a different type of skill set to just being able to crunch numbers in a massive Excel spreadsheet. Like, obviously we can do that as well. Some of us better than others, and I'd put myself in the latter camp. But it's more about that kind of real first principles thinking, that real problem solving, breaking things apart, and being able to try and understand like how stuff works, basically, to then be able to put it back together.
Yeah, it's probably as close as you can get to kind of building a startup without building a startup, right? Like, I mean, if you think about strategy in terms of, you know, you are essentially taking a series of calculated risks in terms of the strategy you're developing, right? Because obviously it's future looking, so you don't know for sure that what you are sort of suggesting is going to work. And it's that kind of build, measure, learn loop, right? It's like, okay, we try this. If it works, you know, great, and we build from there. If it doesn't work, we learn why it didn't work. And
exactly, there, yeah. Right? It's about trying to sort of formulate hypotheses based on not great data.
Yeah.
Find out the quickest possible path to trying to validate those hypotheses, and if it's not working, doing something else.
Yeah.
And so I think that can be helpful. And so, you know, when we were interacting with startups, there's obviously lots of great people, great co-investors and other board members that we interact with, for example, who may have operating experience and or banking experience. And it's not about being better, it's about being different. And really, when we think about building a team around an entrepreneur and actually adding value, there's like a complementarity of skill sets, which is a really key component of that. So I think strategy consultants have a role to play in that.
Yeah. I'm sure there'll be plenty of people that will disagree and agree. I mean, like, look, the reality, I think the reason strategy consultants get a bad reputation, if I can put it that way, within the kind of startup ecosystem, maybe less so in the VC ecosystem, but certainly in the startup ecosystem, is this sort of assumption. And I think, you know, again, there are times and places for all of this. And, you know, we've just had this sort of Paul Graham essay on founder mode, and, you know, you don't necessarily want to listen to the advice of just hire great people and get out of their way. I have a different view on that, or I have a more nuanced way. I don't think it's an either or. I think there are equally great people that you can hire and get out of their way. But the problem, I think, that a lot of founders face is when their boards and their VCs, especially if they haven't been operator VCs, or if they don't come from an operating background, is this sort of, well, if you hire the McKinsey consultant or the banker or whoever, like, you know, they have the great resume, the C-suite title, whatever, they'll get the job done. But when you're in a 50-person startup or even a 200-person startup, that doesn't work normally, because a lot of those people are used to having teams and teams and teams of people underneath them, so they can't execute, right? They can do maybe some of the big thinking, but even that, it's hard because, again, within a startup, things aren't changing every year. They're changing every day, right? So you have to be constantly sort of rethinking that strategy. And I think that's where the kind of bad reputation comes from, when you know, people hire ex-consultants into a relatively small startup, they'll flounder because they're not used to having to just hit the road running and you know, getting shit done, frankly, right?
Yeah, I think it's important to maintain humility, right? And, you know, when we're interacting with founders, at least, you know, I'm not trying to pretend I have all the answers or that some framework is going to solve everything for them.
Yeah, just do a SWOT analysis, everything's fine.
Yeah, SWOT analysis, BCG matrix, whatever it is. But I do think being able to help frame and structure problems from a sort of first principles perspective, and help the founders who are obviously much closer to the business and closer to the nuance, at least get closer to the answer. Yeah. And so it's the classic, like, all economic models are wrong, but most of them are useful, or some of them are useful. And I think that's the approach that I personally take, is like, can I think about that toolkit that I developed, not sort of ram it down people's throat as if they're a 500 million revenue business with lots of process and structure, because they're not.
Would that they were?
Yeah, exactly. Hopefully one day. Yeah. But try and sort of at least bring something that can be a little bit different. I actually think you made an interesting point, and I think it's another thing that maybe consultants get a bad rap for is the kind of difference of mindset between telling someone else what to do with their time and money.
Yeah.
Versus actually making decisions and sort of
being
living
accountable
and living and dying by your. And actually, that was one of the things that, appealed to me quite a lot about a career in venture, is that you are more aligned. Obviously you're not as concentrated in one given company as a founder is. So I wouldn't profess that the sort of risk profile for any given founder is the same as the VC. But the VC is at least making decisions. They're making investment decisions and of other people's money into companies, and then having to live and die by those decisions. So there's a much greater alignment of the incentives than there is if you're a consultant, delivering a very articulate and well-reasoned PowerPoint presentation. But who knows whether that ever gets looked at, and if it does, it's 5 years down the line until you know whether it worked or not, and you're onto your next thing.
Although, like timescales in venture is similar, but what I fully agree. I think there is a, I look at things, you have founders, you have operators, you have, your management team or your core kind of leadership team. But where I think good VCs come into their own is sitting on the board and giving the bird's eye view to the founder, right? So yes, founders in the weeds, like understands what's happening day to day. But to your point, okay, if we step back and we apply some of these frameworks, as you put it, looking outside of the problem set that we have right now in this moment, and think about what is a wider problem set, or what is a wider solution set even. Maybe strategically this is where you want to go to, and then let's work out what the tactics are to get us there. And I think, I'm someone who has sat at both levels in terms of operating as well as at the governance level, and I frankly find my skill set, and again, I think this is a common theme with most sort of strategy consultants as well, is I'm a massive generalist, and therefore actually my ability to sit on board and on a board and kind of provide an overview view versus sitting in the business and kind of crunching the numbers, I feel far more comfortable on the other side. Albeit that I can do both, it's fine. But the preference and the kind of natural sort of the natural skill set sort of lies there. And I think a lot of founders don't appreciate how valuable a really good board can be. Bad boards can be absolutely painful and really sort of just soul destroying and suck time and energy out of everyone. But really great boards can actually help founders sort of rise above their day-to-day challenges and actually figure out how to take the business forward into the future. And it sounds like that's the sort of kind of mentality that you're saying.
Yeah, we try to. When I think about what a board should do, particularly for an early stage company, it should be a joint sort of problem-solving forum.
Yeah.
I don't think you want to get into this dynamic where it's this kind of parent, adult, child structure where it's absolutely. Like reporting up to the powers that be. That's not the way it works. Yeah. So at least that's the approach that we try and take.
Someone put it really powerfully to me once: hands-on but fingers out.
Yeah.
Right. So get involved, but you're not in the detail. Like you've got to know what is your role versus what is the executive team's role. Right?
100%. And I think you have to be. Obviously, everyone's long-term oriented in venture. That's kind of the whole point. I think it's about marrying that long-term orientation with an understanding of the short-term reality, because it's often the short-term that's going to get you to the long-term, right? So you can't constantly be crystal balling it.
At some point you've got to do the work.
It's kind of like embracing that tension, right, between what do we do now versus next versus, and then how is that helping us build towards the long-term vision?
Yeah.
But yeah, I mean, we love working with founders who do see us as helpful, and we try as much as we can to sort of represent, True's network, which we can talk a little bit more about.
Yeah.
But also bring our own personality and our own experiences to the extent that can be useful.
Well, I mean, I think that's pretty valuable. Shifting gears for a second, you spent 5 years at Virgin Management, where venture was part of the strategy alongside the Virgin branded businesses. And I think we're all kind of aware of the Virgin businesses. For those that don't know, we're talking about Virgin Airlines, you know, you've got Virgin Money. There was Virgin Drinks at some point, right?
There's gyms, there's cruises, there's
gyms.
Hotels, there's Virgin Media, there's lots.
Richard's everywhere. So, but how would you say the approach differs in a family or from a family office investing into the venture class versus a more traditional VC, having now sat in kind of both of those seats? And what were some of the craziest deals you saw? And how many of them were done on Necker Island? I have to ask that, yeah.
I can answer the last bit first. None of them, okay, unfortunately. Well, at least the ones that I worked on.
Okay,
but no, look, I think the first thing to say is that Richard Branson, his family office is not a typical family office, okay, right? So he is an icon of entrepreneurship. And really, I think was probably one of the first British entrepreneurs to really embrace the kind of disruptor mentality, giving things a go and being okay with the concept of failure.
Yeah. And he talks about that quite a lot because he talks about the fact he had ADHD, dyslexia, etc., and had to, like, you know, was not great at school and then had to just try and do stuff,
sure,
right?
Yeah, and he's, I mean, repeatedly done and accomplished unbelievably improbable things throughout his career. And so I think that kind of creates a dynamic where he's a little bit of a magnet for crazy and adventurous ideas, which is amazing, right? It's a great environment to be in and to work in, to have exposure and sort of be a fly on the wall of lots of those things. So when I think about stuff that I worked on while I was there, you know, everything from autonomous driving. So we did an investment into Wave that's just raised $1 billion from SoftBank and Uber. Yeah. Remember sitting in the back of the Wave car, going around, you know, around King's Cross. Amazing experience, kind of peering into the future of how we're all going to move around cities. And then, you know, from that to then thinking about electric aviation and flying taxis with vertical takeoff and landing vehicles. And, you know, what's the timing on that? And is there an opportunity for Virgin to play a role there? And then, you know, the next day we're in challenger banking and thinking about whether we should be launching digital banks around the world. And so it was so varied, and you never really knew where the next thing was coming from.
So it sounds like it wasn't thesis led as such, right? Which is very different to like a traditional VC.
I guess on the branded side of things, the thesis was, are there opportunities to leverage the Virgin brand?
More strategic.
Yeah, and you know, obviously one of the great things about the Virgin brand is how stretchy it has been across consumer categories, because it's really it's an experiential brand, and that can work as a sort of a layer across lots of different categories. And then on the venture side, you know, it was a little bit more broad than that. It was primarily, you know, Series A consumer and enterprise technology, and then some bits around the edges that you know, were driven a little bit more by maybe the family's areas of passion. So we did, for example, Memphis Meats as it was, which is now Upside Foods in the cell-based meat space. But in general, it was quite broad, even in the more sort of focused areas around the Virgin brand. And, you know, even being in the investment team meetings on a weekly basis, this is the time when the group were doing space tourism, satellite launching, Hyperloop, launching a cruise line. There was a couple of SPAC vehicles that they raised. I mean, it's just like so much interesting stuff happening, and to get involved in. And it was an incredible opportunity to kind of peer, you know, over the hedge, if you like, into lots of different pockets. And so yeah, it was fantastic. And then on the venture side of things, I was actually primarily on the corporate development side, on the branded business side, but I sort of offered my help to Jono, who ran the venture strategy, because I wanted to get involved and get a bit more exposure to that world. And it was great because, again, you know, Richard's such an iconic person that people want him on the cap table. So from a deal flow perspective, it was incredible. I mean, we co-invested alongside really, really top tier, global tier one funds. And so that was fantastic. And I think also, you know, we did a lot of work on the DD side of things. So it wasn't just okay, whoever's leading
it
it,
wasn't
rubber
fun and
stamp
games.
and
Yeah,
send it up the chain. It was like, no, let's really underwrite this. And so it was a great training ground for really thinking about what good looks like in a venture context.
Yeah.
But it was primarily a co-investment driven strategy on the venture side of things. And so we weren't typically leading deals. We weren't typically sitting on boards. And so, you know, for me, being relatively early in my career, whilst it was amazing to get exposure to that, when I was thinking about, okay, I want to build a career in venture capital, there was maybe elements of it that I wasn't as exposed to. And I think that's one of the key differences, right, to your question, between an institutional VC and a family office. Often for a family office, VC is one of the things that they are doing.
Yeah.
And often like a relatively small part
Yeah,
from an overall asset allocation perspective.
Yeah, if you look at sort of, you know, family offices in general, the bulk of their wealth, or the bulk of their kind of asset allocation is in sort of traditional equity, maybe property. They have some in bonds, then they have, you know, some in private equity, and VC is typically, or was traditionally typically exotic, right? Like it was 5%, 10% of the portfolio. That maybe grew in kind of 2019 to 22. I think a lot of family offices are shrinking back from that again, where, you know, they maybe have become a bit overweighted to venture. But yeah, to your point, it's probably the smallest asset class in terms of allocation compared to everything else that they're investing in.
Yeah, and I think, you know, that's the key difference. You go to an institutional fund and it's then all day. I spend all day, every day thinking about venture capital right now. And if you're energized about that as a career, that's an amazing environment to be in. It's no better or worse from a sort of overall strategy perspective, depending on, you know, how the families or whatever want to allocate their capital. It's just very different, a very different environment to learn in and operate in. And for me right now, in terms of where I want to be in sort of hopefully building my career in this sector, it was a better fit for sure.
Yeah. And so, I mean, were those the crazy deals that you saw down? Was there like one standout super crazy deal?
To be honest, there was just so much going on at that time that in any other context, any of them might seem crazy. I mean, again, autonomous driving or electric aviation or space tourism, all of them potentially pretty crazy outside of a context, but you go into Virgin and they're all going on at once.
And that was back in what, 2015, 16?
So I joined in 2017. And I was there to 2022. And then obviously you had the pandemic.
Yeah.
And watching a group that was very much focused on helping people go out and enjoy themselves, adjust to a reality where nobody was going out and nobody was enjoying themselves. Again, just like a crazy experience overall. But I loved working there and for the family, and it was a really, really good
Yeah,
experience.
I mean, I'm not sure I would have left, but that's me, and I'm in a very different part of my life and career. But I mean, I guess to your point around, you know, autonomous vehicles, electric aviation, et cetera, depending on the time you're looking at those sort of products or businesses, you know, today those kind of sound, yeah, okay, fine. Everyone's investing in space tech at the moment. Like everyone's investing in autonomous, or, you know, is autonomous even really going to happen, right? Like these are the questions that, like, we've almost become a little bit kind of not even disillusioned, but it's all become a bit run of the mill, right? Whereas potentially you guys were seeing this when it was still, you know, who knows what the future is going to look like at this point, right?
Yeah, and I think again that goes back to the benefit of having a principal in Richard Branson, who is, you know, renowned as a forward-thinking visionary.
Yeah.
You know, it didn't take long after something hit his radar before we started looking at it and doing work on it.
Yeah, and stuff no doubt hits his radar a bit quicker than it would hit mine. So look, again, let's talk about True in that case, which, as you said, you know, predominantly invests into the kind of consumer, retail, leisure and technology sectors. Now, consumer and retail have taken a bit of a hit post a fairly strong bounce to e-com kind of during COVID and retail post-COVID. But we now have cost of living crisis, you know, we have supply chain disruption, all these sort of things. You know, Ted Baker, I think, went out of business. You know, I walked into Brent Cross the other day and saw the store shuttered up, you know, and there's been a few of those, I think, in recent times. What are the things that are sparking your interest in the consumer retail space? at the moment? And how do you see the space evolving over the coming years? Because I think it's like I'm fascinated because I am anti-consumerism. Like I get why consumer and retail exists. Don't get me wrong. It's not as if I don't buy stuff. But like, you know, as a person, I'm sort of a little bit against people just going out and spending all their money on stuff, right? I think there are potentially better places to spend your money. But obviously it's the largest category by far of most people's spend, right? Outside of like large purchases like your house or your car or whatever. So I'm always fascinated by how it does evolve because, you know, can people always just continue to buy more stuff, or does something change? Does something change in the way our habits around retail evolve, or does the entire industry evolve? Do we look at more circular kind of solutions? So yeah, anyway, I mean, like I'm sort of trying to answer your question.
I think, it's probably a bit of all of the above. I guess I think what's clear is that over the last few years, both the VC ecosystem in general and the consumer end of that in particular have had a pretty tough time, right? And to your point, it's kind of been almost a perfect storm for consumer businesses. You've had, you know, capital markets coming off massively for early stage businesses, particularly ones with a longer path to monetization. You've had macroeconomic challenges, whether that's interest rates going up or inflation, cost of living crisis, like that. Those things really matter, right? And then you've got geopolitical stuff that's disrupting supply chains and making actually operating businesses much harder. So across the board, it's been a pretty brutal period for consumer in general as a category. You know, when we take a step back and think about, okay, why are we sort of even focused on consumer? What's exciting about it and what's interesting about it? The first point is your point, right? That 60% of the GDP of, you know, most Western economies across the, I think 60% is the OECD average, and I think it's even a bit higher in the US, is consumer spending, right? So we're talking about the majority of effectively the economy is consumers going out and buying things.
Which is why during the pandemic, there was such a sort of push for kind of hospitality, et cetera, because like otherwise, I mean, people were still buying stuff online, but they weren't
for sure,
then.
Exactly. And so, you know, that's hugely impactful, and it's a massive number, right? So it's $60 trillion globally and 15 trillion in Europe. So just like the scale of the opportunity is absolutely massive. And that's obviously for, you know, the consumer businesses that are driving the end consumer spend. And there's a profit pool that trickles down into, and that's the value creation for investors in consumer businesses. But then those businesses are all also buying software and services from a B2B perspective, which is another slice of that market and another profit pool that is accessible if you've sort of focused on the consumer retail ecosystem. So just on sort of first principles, it's enormous, right, as a category. And then you sort of say, okay, well, does that mean that it's conducive to big venture outcomes, which is the next question. And again, like...
because if it, I mean, to kind of expand it, if it's so big, is it just lots of small opportunities rather than one large?
Exactly. And then
market capture kind of...
You sort of look at the examples, whether it's, you know, Revolut, Monzo, Wise, Deliveroo, Bolt, Klarna, Spotify. I mean, these are huge outcomes from the European ecosystem.
And then Apple in the US.
Exactly. And then in the US, you've got Apple, Meta, Google, Uber, DoorDash. I mean, it's just, you know, it's very clear that these can lead to massive outcomes. And actually, we looked at the list of European unicorns that Sifted maintains. We think about 39% of them are consumer businesses.
Interesting.
And then when you look at the Midas list for VC investors, they have their sort of notable deals. So the ones that they're, you know, the things they're hanging their hats on, their reputations, and about 44%, I think, of those were consumer deals. And so, you know, it's pretty clear that you can drive massive outcomes for consumer, even if it's harder in the short term. And actually, Forerunner did a really interesting piece of analysis where they looked at startups on consumer and B2B, and they found that consumer are less likely to get to Series B, but the ones that do are then more likely to IPO. So it kind of sort of feeds this conviction that we have around the scale of the outcome. And even actually, you think about OpenAI, right? I would argue that the thing that really catapulted AI into the mainstream consciousness was ChatGPT, right? Yeah. 2 billion annualized revenue now. So it's like over half of their revenue, and it was a consumer application. And so I just think that these things have an unbelievable scalability if you get it right. And so that's why we personally are still very, very bullish on consumer as an overall category when thinking about the sort of long-term potential.
Yeah, I think the thing, and this goes back to my kind of comment, which now having just heard you speak sounds like remarkably naive and poorly thought out, is, in my head when I think about consumer, I'm thinking about, as I said, buying, cups of coffee or as we now have cans of water, right? But actually consumer goes way beyond that. It is anything that touches a consumer, right? It is not necessarily just a product. It could be a service. It could be a piece of software. It could be your bank account. It could be your mortgage. All of these sort of things are still consumer products. It's just that we categorize them maybe as fintech or banking or whatever, but they're actually still consumer. And I think when you then look at it through that lens, the ability to kind of, to your point, create massively scaled outcomes is very clear. And the other thing is, I mean, you mentioned it earlier, those consumer businesses then buy B2B software, et cetera.
Yeah.
So there's a whole picks and shovels kind of opportunity there. And I think, and I guess probably worth disclosing, that members of my family invested in, or LPs in one of True's funds. But the interesting thing when I look at the kind of makeup of that fund in terms of the companies you've deployed into, they are vastly broad. They aren't, there's one kind of makeup one. I think there's Habu, which is very much logistics. Then I can't even remember some of the others, but I mean, they don't fall into any obvious pattern other than, yes, there is a touch point with the consumer at some point, right?
Yeah, I think on the consumer stuff that we invest in is pretty obvious as to why we're doing it. I think on the more sort of B2B plays, ultimately the North Star for us is, can we activate that network that we've developed across the sort of True ecosystem to help accelerate those businesses once we're an investor?
Yeah.
So if they're in, e-commerce software or supply chain and logistics or data analytics, if they're selling into the consumer sector and they're helping enable those end consumer experiences, then it's absolutely a focus for us. And it's probably the area we're less well known for outside in, but it's actually a huge part of where we're focused. And it creates all different sort of opportunities that maybe don't necessarily have a specific way of investing in the trend in one consumer application or one consumer vertical, but they're more thematic bets. So something like Shellworks that I mentioned earlier, there is a long-term structural move away from plastics. And so the applications for Shellworks is technology. They're focused for now in the beauty and personal care sector, but that's much, much broader, right? And so those are the things that we get excited on the B2B side. Yeah. And then I think, to your question around what are we interested in right now, I think the classic question that you're always answering in VC is like, why now?
Yeah.
Like, what's the inflection point, whether it's tech or whether it's regulation or consumer behavior? Like, why is now the time for this business to be built? And then I do think, the obvious tech inflection point is AI. And it's early in that space for sure, but we think has the potential to be absolutely massive.
There's an incredible business. I will mention them to you later if you haven't come across them before. But I was sat at a dinner with the founder. She's pretty interesting, really, really smart, ex sort of banker. But her business, I think it's called Nibble. Rosie. Yeah. So Nibble, she's developed a chatbot that essentially negotiates price discounts for your brand online to, avoid people dropping off at checkout. And I think that is just incredibly smart because, you either aren't making a sale altogether or, you may be selling at a 10% or 20% discount, but you're still making a sale. and hopefully that will encourage that consumer to come back again. But the way it's done is so organic and so kind of lifelike that you do feel like you're chatting with someone in customer service that is offering you a discount. I think, those are the sort of things that I guess weren't possible or would have been very hard to achieve in the past, which which is probably still only scratching the surface of what is achievable in that.
Yeah, for sure, right. And we spend a lot of time, as I'm sure you can imagine, as a venture team at True, talking about what are the types of consumer experiences that still kind of suck, like even today, right? So a lot, exactly, right? So
I mean, the mere fact. The logistics and last mile is one of them, right? Like that touch point, because like with Amazon, to give you an example, our neighbors are rarely in their flat, but when they get deliveries, like the delivery driver tries to ring everyone in the block to try and figure out like how to get the parcel to these guys. And I think one of them is a police officer, and therefore she can't get her timings are not great. But it's a sucky experience, right? Like, what do you do? How do you? And obviously, there's been attempts to kind of, create lockers and pickups and all of those sort of things. But there is so much about the kind of whole retail consumer experience, returns, refunds, all of that sort of stuff. I think, there's a huge amount that could be improved and would actually make the experience overall for consumers like 10x better.
Yeah, I mean, there's like at least 4 that we talk about a lot, right? So you can kind of think of anything that has a really fragmented and painful search journey involved in it. So I don't know about you, but every time I'm trying to find new clothes or book travel,
that's why I only wear black shirts.
It's a million tabs open.
Yeah,
you're trying to figure out what you want, and then once you find out what you want, you're trying to figure out, okay, where's the cheapest way to get it, or what the right channel is. And it's a complete, terrible consumer experience. In a world where you've got AI agents acting on your behalf to be able to do that work, to be able to synthesize, here are all of your different options, and then crucially, what I think is really exciting is to then actually take action on your behalf,
make the booking.
Like that's fundamentally different, right? So that's one. The second one we're really excited about is like ideas or experiences where you benefit from insight and expertise across lots of different categories or lots of different areas that are currently quite fragmented. So if you think about something like healthcare, you've got, your general practitioner versus your consultants, but then you've got mental health versus physical health. You've then got lifestyle factors around your sleep, your hydration, your exercise, your nutrition. And so if you've got something, wrong with you or a problem, there's no single place that you can go to get a curated, synthesized answer.
My daughter is literally going through this. She has like she's had allergies her whole life, but she's got multiple kind of problems at the moment, and they could all be interrelated, but because each specialist is completely dislocated from the other,
exactly,
she doesn't ever get a holistic kind of answer to any of the questions. Yeah.
So if there's that sort of disparate information that you're trying to synthesize, then there's a huge use case there. The third one for us is where personalization really matters, and personalization to the unit of you as an individual. It's not about putting you into a customer segment and giving you different things based on your segment. It's about specifically tailoring things to you based on where you are right now. And I think
education is like an incredible
example
use case for that.
Education, I did my CFA. There was lots of that I had absolutely no idea on, and really took me the time. If there was a software that could help identify exactly where I was struggling, exactly how I learn, and auto-generate lots of different exercises to help me practice those things, and maybe point me in the direction of different formats of media I was trying
to figure this out in 2015.
Yeah, I mean,
but it's a different time now.
And I think the sort of generative element of AI unlocks, it basically drops the marginal cost of content production to not far off zero. So it's just fundamentally newly enabled. And then the last thing that we talk about a lot is if you think about anything you interact with as a consumer, where there's a constraint on the supply side of high cost human labor. So if we take something like private wealth management, that at the moment is the preserve of wealthy individuals. And the reason is because you need to pay a quite, accomplished individual to help provide that service, and they have a real marginal cost to serve, which is significant. And so there's a minimum viable scale of the customer that can access that service, because if you don't have the assets and the management, that's not going to pay. The maths don't work. Whereas if you can build software that can do a lot of that role for you and bring down the marginal cost to serve the next customer, then you're opening up the 90% of the market that isn't currently served.
Also something I looked at in quite some detail, back in 2018. And I 100% agree. Like anything where there is a high cost to service, right? And we're seeing this with software businesses in general, right? The cost to develop software has dropped so dramatically that it is now possible to do things that just didn't make any financial sense prior to 2023 essentially. And the example you gave of wealth managers just made me laugh, because I think I get like at least 10 LinkedIn requests every month from someone from St. James's Place trying to get in touch with me and manage the zero wealth that I currently have.
You're obviously on a list.
Yeah,
somewhere.
I've got a list somewhere. I don't know why. But it's just really amusing, because I'm like, okay, like these guys, they must be making money somehow, but that is fees. And often I think a lot of people that then use these sorts of services, I'm not throwing shade at St. James's Place. People can do their own research sort of thing. But I think a lot of people come out of those interactions feeling like, or not even those interactions, over time come out of those experiences feeling like actually their wealth hasn't grown, but they've been paying a ton of fees. And of course, there's always an excuse when things happen, right? There's market conditions, or that particular sort of asset didn't quite work out the way we wanted it to. Whereas I think if you're relying on a machine that is using data and is using predictive analysis, there's fewer places to hide, right? Like, I mean,
yeah, and I think there's obviously an element of like, can you serve the current customer base better or more efficiently? Then that's definitely.
Or can you open it up to whole?
Or can you open up to the 90% of the market that don't have access to that level of service? And I think, for me personally, that's where things get really exciting.
Yeah.
Because it means that people can make better decisions. And to your point around, overconsumption or consumerism, when we think about innovation in consumer, a lot of the time it's not necessarily about buying more things. It's about managing all of the problems that I have as a consumer and the different aspects of my life in a more sophisticated way. And so, we think that sort of thing is a fascinating opportunity as well. And then you've got the Nibbles of the world. All of the enabling technology that makes any of that possible has to be built. So, in a world where you've got an AI agent that's roaming around the internet making decisions on your behalf, there's a bunch of things that need to be solved, right? So, like, how does identity work? How do payments work? Where are my preferences stored? How does the AI agent interact between, the buy side and the sell side of that transaction? Like, an AI agent isn't going to log into your Shopify.
Yeah, are they you or are they acting on your behalf, kind of thing?
Yeah, and how are they interfacing? Yeah. What decision rules are they making to assess one proposition versus another? They're just like a whole fascinating group of questions that haven't yet been figured out.
Do you have choice to sign off on the purchase, or can you just let them go off and under your instructions do what, and then who holds the liability?
Exactly. So what insurance products have to be built, and all of that sort of stuff. So that's why I think obviously everyone's talking about AI, but it is a pretty unbelievable inflection point in the sense of the potential to disrupt so many different elements of how we all live our lives. And then, one of the other areas, we've already talked about it, we think consumer health is really interesting from a kind of consumer behavior perspective, because really it's more of you think about the sort of structural tailwinds in that space. Yes, there's technology and the application of new technologies for sure, but A16Z wrote a big report on consumer health, and they make the point that actually a lot of what needs to be solved is that problems of consumer experience are not necessarily problems of scientific breakthrough in the consumer space.
It's getting an appointment and being seen within 2 months, not 2 years, right? For example.
Exactly. Yeah. And we're already seeing, I mean, there's all the tailwinds, right? So you've got aging populations, you've got government services under strain, And you're seeing already the sort of, we talk about like healthification of consumer. So you've got rising awareness of health in normal consumer categories, so like functional F&B, for example. And then you've got the consumerization of healthcare, which is about people taking matters into their own hands, being much more self-directed, penetration of wearables and apps and services so that people can sort of take control of their own destiny, so to speak. So it's really interesting from that perspective. And then, as I mentioned, you've got this sort of industry structure that has innovated around the edges, but no one yet, in our view, has really done the Spotify from taking an outsider's view and really reimagining from first principles, like how that should all work.
Yeah.
And we're starting to see evidence in areas of consumer health already, leading to pretty interesting places. Right, Flow just raised, I think, $200 million at $1 billion valuation. The guys at Zoe just raised a top up, an additional funding round from our friends at Coefficient, and
it's not even sort of traditional tech. I mean, so Dexcom, I think, is just releasing over-the-counter continuous glucose monitor, right?
Exactly.
So all of a sudden, when people have access to these products and these services, improved health outcomes mean probably more cash in people's pockets, because they're probably going to be able to work more, which means they're going to be able to earn more, which means they'll be able to save more and spend more, and they'll probably live longer, which also doesn't hurt, when you're looking at sort of spending habits. So yeah, I mean, both health and education, I think, are like massive categories. I've always said this, that certainly with education, I've always said it, but they're both categories which have second and third order effects, which are quite incredible. So if you can fix those, you fix a lot of other stuff. And this is why, I mean, the data shows that, when you fix education for young girls in developing economies, things change incredibly rapidly.
Yeah.
Right. I'm not saying we necessarily have that problem in the West, but we certainly have a problem in the West, not least the fact that the education system isn't fit for purpose, doesn't necessarily work with people that are neurodiverse or have different learning abilities or methodologies, right? So,
and you must have seen the classic chart, right, of sector inflation over time, and you look at healthcare and education where technology hasn't really played its role yet in dropping the costs of that sector, and so you've just seen. It's a US specific example, so I'm sure it's a little bit different in the UK, but incredible escalation in costs in healthcare and education versus dramatic reductions in costs elsewhere. Yeah. And so again, going back to the tech inflection point, without sort of trying to pretend that AI is going to save us all and be too sort of technotopia about it, this does create an opportunity to see if some of those more disruptive elements can start going after these huge sectors, which, to your point, like, they make a huge impact on everyday people's lives. And so it's the area where we want to be pointing entrepreneurial effort and energy to help solve.
Well, if I can help, let me know. So look, I guess one of the key benefits that True's portcos get is the incredibly strong relationships the fund has with large players in the retail sector. You talked about hundreds and hundreds of partners at C-suite and leadership levels within these sort of companies. So how do you leverage those relationships realistically? And do you see this as a symbiotic relationship for both the portcos as well as the retailers, or how do you actually view that?
Yeah, I mean, again, maybe taking a step back, I think what's very clear, at least for us, is that venture is an incredibly competitive space, and so
maybe getting a little less so. I think there's going to be fewer funds around in the next few years.
Yeah, but there you go. Then it's competitive from a fundraising perspective, right? And so trying to go head to head with generalists who have bigger platforms or more established brand moats or whatever it might be is really tough, right? So you've got to have an angle, and for us, the angle is the sector specialist approach combined with this interesting model that I described, where we've got sort of venture, PE, and the innovation advisory business all under one roof, which is all great, but none of that actually matters unless it shows up for founders and for our investors
and makes meaningful
in a meaningful way. Yeah, exactly. And so we're constantly doing the work on thinking, how do we activate that network in the most useful way? And to your point, make it this kind of symbiotic relationship where everybody in the ecosystem benefits from being part of it. So on the venture side specifically, when you strip it all the way back, venture's ultimately about finding the best companies, selecting the best ones of the ones you found, and then supporting them in the most compelling way you can. And so we're trying to use the ecosystem and our sort of model across every single step of the way. So on the finding side, we've got quite a strong brand in the consumer space. We're actually doing a lot more work to try and build up brand awareness on the B2B side that we've talked about, because we're probably a little bit less known for that. But that's really helpful from a kind of attracting deal flow perspective. And then we've got the network of corporate partners who are providing input on what's top of mind for them, which is a really interesting kind of signal for us to then inform maybe some outbound development work that we do to try and originate.
Is anyone working on X, Y, or Z?
Exactly, who's working on it, and hopefully we can then to this sort of symbiotic relationship point of view. Hopefully that means we can have an initial conversation with a founder where we're starting with an informed insight that is hopefully valuable to them as well. And so that's on the finding side. And then we've obviously got the broader network of people who are contributing ideas because they know that True's actively investing in this space. So that, again, it's all contributing to, I think our deal flow at the moment is about 3,000 companies a year. So we've got a pretty good...
that's pretty strong for a fairly small team, I think, right, in the venture side.
Yeah, I mean, and it's because we get to leverage the work of, for example, the innovation team that are doing dedicated set piece, real thought leadership bits of work on certain sectors of technology for the consumer and retail space. And they're unearthing all sorts of interesting companies that we can then potentially speak to from an investment standpoint. So we benefit hugely from that. And it means we've got quite a good finger on the pulse of what's happening in general in the category. And then going back again to the symbiotic relationship, we can then play that forward into our partners so they understand what's out there. So that's on the sort of the finding side. On the selecting side, again, we're trying to leverage it as much as possible in the sense that we have access to a network of people who are, whether they're kind of current executives or former executives, advisors who have operated in this space, they understand it, they understand the problems. And so we can use that as part of our diligence process to really kind of validate the kind of problem, solution, value proposition of the startup. And actually we get quite early on in the journey, we start trying to make introductions because it benefits us because
the sooner they validate, the more obvious it is
for sure
whether they're going to have an outcome.
So we benefit because of that.
Yeah.
The partners that we're introducing, or the people that we're introducing the startup to, benefit because they've sort of opted in to be part of the True ecosystem, and they're interested in tech.
And they may not have thought of that as a solution, or may not have had the problem on their radar. And then actually when they see, well, okay, these guys are solving this, actually, yeah, this is costing us whatever, 1% of...
Exactly.
Whatever, yeah.
And then, most importantly, in some ways, the founders benefit because they're getting access to hopefully someone that they value from a sort of commercial go-to-market perspective to be able to sense check the proposition. And they're frankly getting a bit of an inside view early on in the process of our network, and sort of the substance behind it.
So you're adding value before you ask, how can we add value?
Yeah, I mean, I kind of cringe at the adding value terminology, even though I've probably said it 3
How
times.
can I be helpful?
Yeah, exactly. But we try and at least
actually be helpful.
Yeah, exactly. And then on the support side, I think that's where sort of the engine really gets going on the ecosystem, and we get very, very specific when we're doing our sort of investment memos and our underwriting thesis of, okay, what are the things that we're going to do for this company? What specific introductions are we going to make? And they might be customer introductions to companies in our portfolio, or it might be certain areas of expertise that we think they need help on. And again, we're not trying to do everything because we're not pretending to be specialists in everything, but where we feel like we've got a differentiated angle in helping the founders with a specific thing, then we get quite concrete on that. And we've got a pretty good track record, and hopefully, our founders would agree of really living up to the promises that we make in the sort of the dance of trying to get into the deal or making the investment decision. And a lot of that is about being like very, very transparent on this is where we can help and this is where we can't help. And so, and again, like those introductions are then hopefully landing in the inboxes of people who are engaged with True as a source of interesting innovation and technology. So it sort of lands with impact and have the potential to then implement it into their businesses. And so,
and presumably for every introduction you make, if those are successful, like they're more welcoming of new introductions or new kind of ideas and concepts coming through. Right?
Exactly,
So kind of
exactly, yeah. And so that was really the sort of original thought, the whole thesis of True that Matt and Paul, the founders, had, was to build this ecosystem play, this network where everyone benefits from being part of it and bringing together those real innovators at the earliest stage and matching them up and giving exposure to the corporates at the very top of the food chain and almost everything in between.
And it also helps that, I mean, for those really, great businesses that graduate to later stage, you've got a private equity kind of fund sitting there that potentially can kind of, buy out. I mean, I'm sure there are some not necessarily restrictions, but there are some declarations that probably need to be made along the way. But
But I think the point is very valid, right? The other thing that we don't maybe talk enough about is we've got nearly 40 people across the business that have hundreds of combined years of experience of either investing in or operating or advising consumer and retail businesses. So even if it's not necessarily that the PE fund is the buyer, they might be able to provide some sort of ideas and insights on how would the PE buyer community even think about this? Like, what are the key things that they would be looking for? What's the right narrative? Or this is what we've seen in this type of business that looked a little bit similar and maybe offer some support. And so in addition to the ecosystem that we've developed, sort of external to True, there's also quite a lot in-house that we try and leverage. And they're very different teams in that they're sort of run separately, and the investors in the PE portfolio and the VC portfolio are different and all that sort of stuff. But we are very much co-located and talk to each other every single day. And that's part of the magic, is those like collisions of, you're talking to so-and-so retailer about this bit of technology. We saw something 2 weeks ago that could be interesting. And then, that's where the benefit really starts to show up.
Yeah. No, amazing. I think ultimately, especially with something like consumer retail, where it is such a big category, to your point, the amount of value that is accrued in that sector, the sooner you're able to get in front of real customers, and retailers that know their customers, the quicker you're going to be able to validate the proposition, the quicker you're going to be able to pivot if you need to pivot, the quicker you're going to be able to figure out pricing, et cetera, et cetera. And that's an edge, right? And ultimately, I think it's a truism that if you are the only person building a product, then the likelihood is it's the wrong product, right? So there is going to be competition out there doing stuff that is similar to you, especially in a category like consumer and retail, where, I don't even know how many kind of challenger neobanks there are out there, but there's more than two, and therefore your ability to kind of get that feedback loop happening quicker, faster, and, with engaged partners rather than sort of like, oh, would you trial our product and kind of maybe do a pilot sort of thing, I think is invaluable. So yeah, I can completely see how that would be, an incredible kind of value add for the portcos.
Yeah, we do our best. I wouldn't like to sort of
that was very self-deprecating.
Yeah. Also, sorry, I wouldn't want to profess that it's always perfect.
Yeah, of course, but nothing ever is.
We definitely give it a good go.
Yeah. Well, look, we're going to end up with one final question. So, what is one thing that you have a contrarian conviction about from any area of life, whether that's work, politics, socially, or at home? What is the hill that you would die on defending?
So I thought about this because I know you asked your guest this question. I think the most contrarian thing I could possibly say is that Ipswich Town are going to win the Premier League in the next 10 years.
Love it.
But I'm not sure.
James, the producer, is out there like just crying.
Excellent. But I'm not sure I'd call it a hill that I would die on necessarily. And I think that in general, I think we were talking about it earlier before we hit record. There's a kind of tendency to have hot takes and be really contrarian on stuff. And actually, I think most of the time for the important things, and actually weirdly, particularly for often the most divisive things, the answer is often somewhere in the middle.
Yeah.
And so
we've lost the art of nuance, haven't we?
Yeah, and I think at least what I try and do is adhere to the whole, strong opinions weakly held mantra, where it's not about not engaging in the debate or refusing to form an opinion. It's about trying to form an opinion, but then being open to like hearing good arguments against it and then figuring out what's...
Yeah, when the data changes, I'm open to change. Right?
Exactly, right. So at least that's what I try and do, and that leads to less really interesting hot takes and contrarian conviction statements, but I think probably keeps me out of trouble.
Well, it's also not a bad mantra for kind of VC, right? Because I mean, as we said at the beginning of this of this podcast, like, my kind of thought process around consumer retail was probably quite entrenched in one sort of paradigm that I was thinking about. But actually, after having this conversation, I might consider making an investment in because when I have anything that I can invest, might consider doing that, because it is broader, and what kind of categorizes as a consumer is more than just stuff that you buy as a product, right? So I think the strong opinions weakly held is something that all of us should do better. I think so many of us have become entrenched politically or even in football, whatever it might be, right? But we've become entrenched in our opinions, and obviously we know that social media has had like a part to play in that. But I think if we're just open to discourse, and it doesn't mean you have to change your mind, but just be open to the other person's perspective, because it might actually help you A, understand why they have that perspective, but B, it may actually strengthen your own perspective.
100%.
Right? So look, Joe, it's been absolutely incredible having you here in the studio. Thank you so much for your time. For our audience, where's the best place for them to find you online? You're on LinkedIn, Twitter, where can they find you?
Best place to find me is on LinkedIn, and then True more broadly is at true.global. So that's our website. Take a look and get in touch if anybody's interested.
Amazing. Well, thank you so much for joining me. I really appreciate it.
Thanks very much.